Hey guys, it's Kevin with Watchhimtrade.com going into the week of May 18th through May 22nd, 2015 with my Bulls versus Bears outlook. As you can see, there is no change. I'm still repping the Bulls, specifically number 12, Kirk Hinrich, 12-year veteran, maybe even longer at this point. Kind of reminds you of this bull market, huh? Just keeps coming to play, keeps showing up. People doubt him, but he keeps coming back. You're not moving higher viciously, but we continue to go higher. And that is the name of the game in the stock market. Are you going higher or are you going lower? I said this to you guys a couple weeks ago. Until I start seeing us go lower, I'm not putting on a Bears jersey. I'm not looking at shorts for anything more than scalp trades or quick intraday setups. The bottom line is this market continues to grind higher. While it may be frustrating that most of the gains are coming on an overnight basis, the gains are still coming. And something happened this past week that was a little bit different than weeks past. Recently, we've been seeing moves beneath 2100 result in at least 1% pullbacks, first to 2077, then to 2066 in successive weeks. This week, however, we broke beneath 2100, came down to 2085, but that's the lowest we got. So the move got a lot shallower to the downside, and that was a signal that I felt like we were going to break out to the upside. I was letting my members know in the chat and live trading that that's what I thought, and sure enough, by the end of the week, we had closed at a new all-time high in the S&P. However, I'm still not looking for insane upside. I just don't think that's in the cards right now. Maybe I'm wrong, but until the market shows me a big-time move to the upside, I'm going to keep looking for those Kirk Hinrich type moves, those grind, slow, higher type moves. Nothing electric, but slow and steady to the upside seems to be the name of the game. So what do I want to see now? I don't even want to go back to 2100 if we're going to be staying rock solid to the upside. We tested 2100 enough times over the last month and a half in my eyes that we should now just be steady above it without any need to go back down there. So stay above 2100, 2125. That is the official intraday all-time high on the S&P. Get above that. I'm targeting 2035, 2135 to 2150. If we start backing away from 2120, look for a down test into that 2110 to 2100 range. And below 2100, I would be concerned because, as I said, I feel like we've tested it enough times. Don't need a real reason to go back down there. So if you did go back down there, I would think that maybe we're a little bit exhausted and we can go down towards 2050. Key level to me on the support side moving forward is 2085. This past week's low. You bounced off of that, made a new all-time high, so that becomes kind of the peg that I want to see. If I'm bearish, I want to break beneath that. That's what I think you need to get below in order to get a good flush lower. So that's how I see the S&P 500 and broader markets. Good luck.